Welcome to GEPL Capital's another market outlook video. I'm Sanket Bendre from the Fundamental Research team. So in today's video, we will be discussing about the US and India's trade deal that happened in the previous week. So let me share my screen so that we can have a detailed overview. Okay, now I hope my screen is visible now. Yeah. So as I mentioned that we will be discussing about the India and US interim trade agreement that happened on February 6th. So let me share the three key pillars of this trade deal. So if you see the enforced reciprocity, so moving from free trade agreement to a managed trade, so the US will apply approximately 18% of reciprocal tariffs and certain zero tariffs on certain sectors as well as products. Further, India will also be intending to purchase $500 billion of products from US over the next 5 years. So if you see here, we have written commit, but this was changed to an intention over the last 2 to 3 days. So that was a change that happened from the trade agreement. Further, we have a united front against non-market policies of third parties and the removal of technical barriers for the technology sector. So these were the three key pillars of the trade agreement. On the sector-specific tariffs, so if we see textile and apparel, leather and footwear, plastic and rubber, organic chemicals, as well as home decor and artisanal products will see an 18% of tariffs, whereas generic pharma, gems and diamonds, and aircraft parts will see a zero tariffs based on this interim trade deal that was signed by the US and India in the previous week. So the $500 billion intention to purchase over the next 5 years. On that basis, if we see the key products that will be purchased will include energy products, then aircraft and parts, technology products, precious metals, coking coal. So these are some of the key products that will be focused on the overall $500 billion of uh, establishment. So this will be a key thing to watch out for. So India will uh, eliminate or reduce tariffs on all the US industrial goods and a wide range of agricultural products. So if you see some of the agricultural products will include fresh and processed fruits, tree nuts, wines and spirits, soybean oil, then dried distillers, grain, and red sorghum. So if you see most India, some of the key agricultural products such as rice, wheat, or pulses that India grows primarily are not seeing any tariff reduction. So these products mentioned here are the products that will be seeing tariff reduction, and these are the products that are least grown in within India. So there won't be much impact on the overall agricultural sector of India. So that was just a key thing to watch out for, as most of the analysts or people were saying that agricultural sector will be impacted. However, government has thought about it, and a very less amount of production within the agricultural space are seeing this reduction on the tariff side. So, as we mentioned in the beginning as well, the technology will see some of the least tariffs. So, the hardware focus, so commitment to significantly increase trade in the GPUs, that is graphics processing units, and all the data component sectors. Further elimination of India's restrictive import licensing procedures and communication technology goods, as well as setting a clear pathway to achieve robust, ambitious digital trade rules in this agreement. So these were some key things to watch out for on the technology sector in terms of tariff side. So if we see medical devices and pharma oral sector is seeing a reduction in tariffs. So on the medical devices front, India agrees to address long-standing barriers to trade in the US medical devices. As we have known, India primarily is in the pharma sector, has a good amount of contribution in the pharma sector of US. However, now we are moving towards medical devices as well. So that will be a key thing to watch out for, and most of the Indian companies that manufacture medical devices should benefit out of this. So if we see the interim trade agreement set a foundation on February 13th of 2025, that's previous year negotiations were launched. On April 2nd of previous year, tariffs were signed. And on Feb 6th, that is in the previous week, an interim trade agreement was signed to reduce these tariffs. And over the next 6 months, a standard review will be done from both the US as well as Indian side, whether these tariffs are working or not, whether how and when we should move towards further arrangements on this bilateral trade agreement. So that will be a key thing to watch out for over the next 6 months. So strategic implication for key stakeholders will include exporters. So most of the companies that export textiles, gems and jewelries, as well as components auto and machinery companies should benefit out of this. Further, technology and defense companies should also benefit, and as well as there will be a paradigm shift that trade is no longer just free, but it is reciprocal and secure. So that will be a key thing to watch out for from this trade agreement. So that's all in this video. So we will do continue to share this kind of video more in the upcoming weeks. So do stay tuned on that YouTube channel. So do hit like, share, and subscribe for GEPL Capital's YouTube channel for more further updates. Thank you.